And good Monday, good afternoon, and good morning, depending on where you are listening from today. My name is Jeffrey Tesch. I'm CEO of RCN Capital. Today's webinar, the second in a series provided by REI Inc. magazine, will be focusing on property management and really drilling down on the new realities that we're all facing in the real estate investment space today. Today, we've really put together an outstanding panel of folks not only who specialize in various areas of property management, but they also offer a wide geographic footprint from coast to coast. Really excited to be able to introduce these folks. And every one of the panelists today is going to provide a little background on themselves. And why don't we kick it off right away? So, Mr. Todd Gorelik, please start. Todd is from Gorelik Brothers Capital Management, and Todd is out of Charlotte, North Carolina. Todd, if you could provide a little background on yourself and your firm.
Be glad to. Thank you, Jeff. And I hope everyone here today is healthy and safe. Thank you, Jeff. Thank you, Suzanne, for putting this on. Gorelik Brothers Capital is an alternative asset manager, and since 2008, we have focused on residential real estate debt and equity. We began purchasing single-family homes, renovating them, and leasing them in 2013. Most of our homes are intended for median-income households. They're 3 beds, 2 baths, generally renting for about $1,400 a month. In 2017, we established our own property management firm, Goal Properties, to manage our properties and those of another institutional investor. Today, we manage about 4,000 properties, primarily located in 10 markets along the eastern seaboard and southeast, the Midwest, and in Texas. I'm looking forward to sharing today what we've seen as both an owner, operator, and a property manager. And I'm also very eager to learn from you and my fellow panelists about what our business might be missing or could be doing better.
Appreciate that, Todd. Thanks so much. Next up is going to be Bob Hansen, head of sales at Second Nature. Bob is out of the greater Chicago area. Welcome aboard, Bob.
Hey, thank you very much. Glad to be joining. Thanks for the invitation. Yes, I'm at Second Nature. For those of you that may not be familiar with us, we are a HVAC filter delivery company that got started direct to consumer doors. You know, think of us as a subscription-based, kind of like a Dollar Shave Club, right? You don't have to worry about thinking about when you need to change your filters. They show up to your door on time. As the company began to grow over the last couple of years, we got into single-family property management. So, you know, we're working with thousands of single-family property management companies across the country, you know, that manage hundreds of thousands of doors. We've been able to prove out about a 40% reduction in HVAC work order tickets, which I know is very important to all of you. Prior to joining this Second Nature staff about 1.5 years ago, I was on the single family REIT side, overseeing operations for Home Partners of America. So I know how much of an impact HVAC can cause to the bottom line, and saw it as a great opportunity to jump over and help folks in the industry.
Oh, thanks so much, Bob. Great to have you on. Next up is going to be Bryan Jenkins, principal broker from AHI Properties out of the Birmingham, Alabama area. Hello, Bryan.
Yeah, hey, how are you guys today? So start with a little Roll Tide. That's always a decision you have to make when you come to Alabama, Roll Tide or War Eagle. So I usually roll with the Tide, but we manage about 1,200 single family homes across 5 marketplaces. 4 of those are in the state of Alabama, and then we also manage out of Oklahoma City. And we also have a corporate housing company. So we've been in the relocation business in one form or another since 1990, and started buying single family investment homes, particularly A-class assets, to do corporate leasebacks in 2000. And I guess it was 2004 we started managing client assets for others, individual owners, small funds and REITs, and we've just grown organically since that time. So we typically own around 10 to 15% of our total portfolio, and in all my spare time, I actually Also operate as the Southeast Region Vice President for NARPM, or National Association of Residential Property Managers. And I love taking part in these calls just to kind of share the education piece, spread the wealth of what people are doing, what's working during this time, and also to pick up new tips that work well for other folks so we can implement those into our own operation. So thank you for having me today.
Appreciate that, Bryan, and to all those college football fans out there, we all can't wait to get back at it. September can't come soon enough. Next up, Adam Love, President, Residential Division from SMS Assist. Adam, welcome aboard. Adam is out of the Phoenix, Arizona area. Adam, say hello to our group today, please.
Thanks so much, Jeff. Yes, Adam Love, President of the Residential Business Unit at SMS Assist. Before joining, I spent 5 years, the first 5 years at Invitation Homes, roughly from zero homes acquired to 50,000 and all the ensuing construction turns and eventually internalized maintenance of those properties. I then moved to Open Door, spent 2 years there building out a very similar construction and maintenance platform. And then the last 7 months over at SMS, getting back into institutional single-family REIT space, and instead of being on the owner operation side, being on the service side. So it's slightly different angle for me, but a familiar industry, and very happy to be here. Thank you.
Great to have you, Adam. And finally, Steve Batten, VP Field Services from SingleSource Property Solutions, once again out of sunny Arizona. Welcome aboard, Steve.
Thanks, Jeff, and thanks to Suzanne at REI Inc. for inviting me to meet your listeners. Go Sun Devils. I'm with SingleSource Property Solutions, where I'm responsible for the field services line of business. For 20 years, SingleSource has been a national provider of residential property services to investors, mortgage originators, some of the largest servicers, as well as secondary marketing entities. Our products include field services, which we'll be discussing today. That would include inspections, maintenance, repairs, and rehab and remodeling. We also provide asset management, due diligence, title, valuation, and document management. Just to provide some perspective on the size of our business, last year we completed over 200,000 field service work orders. My personal experience is varied. I've got experience with the top 5 mortgage field service company. And at the peak, after the recession, we were doing over 100,000 property inspections a month. I also spent a large part of my career in the mortgage servicing business, managing foreclosure, REO, loss mitigation for companies like JP Morgan Chase, Carrington Mortgage. And most recently, I founded my own regional field services company, and I've got hands-on experience actually performing work at properties, including trash outs and lock changes.
Well, fantastic, Steve. Great to have you on the panel today. And once again, everyone, my name is Jeffrey Tesch. I'm the CEO of RCN Capital. We are a 10-year-old nationwide platform for lending into the real estate investment space. Our niche products are financing short-term bridge, folks acquiring, renovating, and eventually selling single-family 1-4s back into the marketplace across the nation, as well as multifamily apartment buildings across the nation, short-term bridge, acquiring, renovating, doing CapEx, and bringing the multifamilies up to today's standards, as well as long-term rental in the single-family 1-4 space, all which the majority of is 30-year paper. Folks doing as small as single aggregation to large portfolio products nationwide, working with individual investors as well as more sophisticated corporations, providing the long-term debt service that they need in putting together portfolio loans for single-family asset aggregation. Family company based out of Connecticut, started very humbly, and we sit up around 100 employees today, and really proud of what we've built, and really proud of the partnership that we've formed with REI Inc., getting information out to the masses in these very volatile times. So once again, a big thank you to Robert and Suzanne from REI Inc. magazine, who put these series of webinars together. So let's get right into it, panelists. Over the past 5 weeks, we've all seen, from an investor standpoint, our world turn upside down. But really what I'd like to start out with today is some of what you're seeing on the ground, meaning operationally, repair, maintenance, if you have active construction sites going today. I would love for each of you, and from here on in, I'll call out your names individually. I may do follow-ups as well, but I would like each of you individually to share with us in your various geographic regions how some of the local laws have changed, how some of the initiatives that you're trying to provide to not only your property owners, but the tenants as well. From a repair, maintenance, and construction side, how are you dealing with what we've seen? And Todd, I'm going to start with you, as you have a pretty wide footprint, and then we'll move from there. So Todd, what are you seeing today?
Yeah, well, I think all of us began to see the shelter-in-place orders start to roll out in mid-March. And even before then, I think we all knew what was coming based on college kids needing to come home and so forth. And so we started planning for this in early March. And I'll talk about some of the operational changes that we made on the repair and maintenance side. And I'm only going to mention a few of them. We do a good deal of business with Adam over at SMS, and I don't want to steal much of his thunder. He'll be able to talk more in depth about some of it. But we notified our residents in mid-March that we were going to begin to defer non-emergency work orders. For us, that means repairs which don't affect life safety or safeguard the property from continuing physical damage. Our residents continue to place those work orders, so we have pretty good visibility on what's being deferred. And we do continue to do the emergency and urgent stuff. During the second and third week of March, as those stay-at-home orders were rolling through our markets, we really tried to over-communicate with our employees about what we were telling residents and how our operations were changing. You know, everything was focused on reducing transmission risk by reducing human contact. And we also provided safe passage letters for our field employees. These are letters they can show to law enforcement if they were stopped. And we haven't seen much of that, but we were worried that might start. And we wanted our employees to have clarity that they wouldn't be violating these stay-at-home orders because our business was essential, and we were literally daily watching the orders come through and reviewing them to make sure that we could comply adequately. Fortunately, there hasn't been a whole lot of stopping people from doing essential services. We also started treating vacant homes differently. We're continuing to turn homes. People are continuing to move out and move in, though I would say that activity has diminished materially. And we're treating homes either with ozone gas, which we've long used for deodorizing homes with difficult odor problems. But the ozone gas, as some folks may know, has been shown to be effective against viruses that are nearly identical to this novel coronavirus. In some cases, if we can't use an ozone machine for whatever reasons, we'll make sure that the home remains empty for at least 3 days. And then we'll do more intensive cleaning using various methods recommended by the CDC. And we'll do that again after a move out, and then again several days before a new resident moves in. We're currently considering adding another cleaning periodically after so many showings, which we have pretty good visibility into because we've been a long user of self-showings and report on that. I would say but for the timing and one other difference, there haven't been meaningful differences between our markets. In one of our markets, I think a number of our employees felt especially fearful, and I don't think that arose from any particular conditions. I think it was just personality. And we had to address that with counseling and by giving them more discretion. I think the communication with employees and residents has been about the most important part of our response to the whole crisis. So I'll leave it there.
So Todd, just a quick follow-up. My guess, and certainly I've heard this from our customers on the lending side dealing with their tenants, is that it's a wide range of concerns that tenants have when they're moving into a vacant property. Have you standardized a checklist that you are able to go over with these new tenants, or how are you handling their concerns on an individual basis so that you're able to scale it across your company?
Well, I think that's a general question that doesn't necessarily require this crisis as context. The answer is yes. If we want to be able to adequately train our employees and ensure that our residents have a consistent experience across all markets, we want to make sure that that arises from reality. So in fact, yes, we do have a resident orientation that is standardized across all of our markets, and that has not changed. We continue to do that.
Oh, that's great. Bryan, I'm going to switch to you. As an owner, as well as a manager of a great deal of individual assets across your marketplace, how are you dealing with the various levels of not only repair and maintenance, but my guess is you probably also have some larger projects underway. How are you dealing with these different facets of the new reality we're in today, Bryan?
Well, it's definitely an interesting time that we're in, and I thought Todd had some great insight as to day-to-day operations in the maintenance arena. And we're no different. We, across our five different marketplaces, we actually outsource a large percentage of our maintenance. One way that we've chose to deal with everything that's ongoing right now is to have a clear line of communication with all our various vendors that are within our networks. We too did the same thing. I think I was about a week behind where Todd was, about mid-March for us in Alabama, and Oklahoma was on about the same timeline. We decided to implement and reach out to our residents and owners and our vendors at the same time, and just let them know that we had made the same decision to defer all non-essential and non-emergency maintenance. And we were basically at that time we were choosing to choose a timeline of I believe it was April 23rd, which was in line with some things that were going on within our state regarding the school systems. And then once they came back and decided to cancel the schools for the remainder of the year, except for remote learning and virtually, we made a decision to go ahead and take it on a month-by-month basis in regard to our maintenance, and much in line with what Todd was going for there. We have been staging our work orders and basically triaging those as they come in, handling the emergency work orders through our vendors, and some of the vendors we've had some shifts with. Some of our primary vendors have, we just got notice this morning that they were not doing work through May 1st, and they were going to close out all work orders that they had and put those on pause to pick back up on May 1st, unless they were an emergency category. and that was an HVAC vendor here in Birmingham. So just trying to stay in tune, let them know that they can communicate backwards to us and say, hey, if we're having staffing issues or if we've got concerns about transmission exposure, that sort of thing. But we did take the time on the front end and just lay out based on CDC recommendations and operating. We polled our vendors to see what type of precaution they were prepared to take, and then we systemized that across all of our vending platform to all of the vendors that were doing any type of work for us. The other thing that we actually took off the table was we went ahead and took the periodic inspections that we're normally performing on a regular basis off the table. And actually, since then, we've turned around and we use an app product called Z-Inspector, and we've been able to actually deploy Z-Inspector to our residents to do a self-inspection. And so our owners, we've got some institutional owners that we manage for, as well as individuals, and collectively across the board, there's been an agreement to incentivize the resident to do that, so we can minimize exposure, yet still get the feedback on the properties room by room, just to make sure everything's they're performing the way they should as far as tenants adhering to the lease agreement and taking care of the properties. So there's several different dynamics going on there. We are still conducting turns, rehab projects as well. Same thing with the essential letters going out for our employees and our vendors. We took the step to send those to the vendors as well, just in case they did not have their own letter in place. And it's worked out well. I mean, we're shelter in place in both states that we operate in. And we've had one incident where we were stopped by law enforcement and the letter was sufficient. So that seems to be the new normal. And one thing that I would add to Todd is I know ozone treatment on the air within residential property between residents is important. We've always done we've done chlorine canisters as well as an odor control component. And I got with the manufacturer that we get those from, and that's a step that we've begun to deploy in between residents as well. Just set the chlorine canisters and actually circulate the air through the HVAC ductwork, open cabinetry, appliances, all that, and treating literally every centimeter of the interior of the property.
Yeah, that's fantastic, Bryan. I'm sure there's a lot of investors, both small and large, today on the line that jotted down your Z-Inspector a note there, and maybe if you could provide the audience a little bit more on how it works and how you've integrated it into your operation in these crazy times.
Well, the nice thing is we've been using Z-Inspector's platform. It's a web-based app, and it's basically set up on a per user account basis, and we deployed it across both our property management company as well as our corporate housing company to conduct move-ins, move-outs, periodics. We've adopted it to handle maintenance inspections. So if we're going over, for instance, one great example of how we use it is during the term process to establish scope of work and come back and fully customize that and send it out to multiple GCs for bid process, as well as if we're doing draws on those, ensuring that the scope of works are being completed and giving feedback to our owner clients, as well as the final QC inspection that takes place before final payment. So those are just a handful of things that we utilize it for. It is a great platform, cloud-based storage. I've used a couple different ones, but we've actually been with Z-Inspector now. I think we're going into our 4th year, and they do a great job of continually improving the product. And I've compared it with software-based products, and it just seems to be a superior performer, and that's why we've continued to utilize it.
Oh, that's great, Bryan. Thanks so much. So going to transition over to Bob. Bob, both Todd and Bryan have mentioned working closely with their vendor partners and how things have changed over the past 4 or 5 weeks. You, as a vendor who's an integral part of the REI community, what are you seeing? I know certainly Second Nature has also held some great informational webinars. I would love to know you as a vendor of certainly huge importance to what we have going on here. How have you had to change, and how have you adapted to what your customers need?
Sure, yeah. In terms of on our end, just some changes that we've made, right? I mean, thinking about leading with empathy first, having a lot of discussions with our current clients, right? Former clients, people that we know, just kind of making sure everything is all right on their end, and then letting them know that, if they want to talk about business or want to know how we can help out, we can certainly, walk them down that path. Having those webinars, and we've been hosting, I think Bryan mentioned earlier with NARPM, just the fact that we have a high level Zoom accounts, we've been sharing with other NARPM chapters across the country that they can utilize our technology to host their local chapter meetings virtually versus people kind of coming into place. So just kind of thinking about how we sell a little bit differently and how we're able to get in front of our clients is a little bit different today than it was just 6 weeks ago. But in terms of the business standpoint, we've always led our program. Typically, like you come on board with Second Nature, and you'll add our filter subscription business to new leases and or renewals. But we have had, and we've heard through our conversations recently, a lot of owners reaching out to property managers to find out how maybe they can get onboarded sooner, right? Same with tenants reaching out that are mid-lease that might not be on the program, asking about it. And so we're kind of helping those property managers out by leaning in with owner opt-ins so that they can take advantage and pay for the service until the tenant's lease renews. And that way, as we get into peak, season for HVAC repairs, they will have filters showing up the door, right, and seeing that 40% reduction we've been able to share with our clients across the country. So that's a little bit from our end what we've done differently.
That's great. Just sort of a follow-up from that, and I know you've been hosting, as I mentioned, some of these informational sessions. A lot of folks seem to be really relying on technology. Bryan was nice enough to throw out the Z Inspector. What are you seeing from a technology standpoint that investors across the country are able to use?
I mean, I guess from a technology standpoint, from where I stand, I think it more talks about like what are you doing maybe to work with your own employees that are now working remote is what comes probably top of mind to me. And I guess I've been fortunate enough to lead some remote teams in the past, so it's not new to me. But I think you got to think about your KPIs, right? I learned early on from a former mentor, what doesn't get measured doesn't get done, right? So what are the KPIs that are most important for your folks working at home? What kind of technology are you utilizing, right? Are you setting up dashboards with your local property management software that you're using? Are you utilizing things like we use Salesforce, right? So I can create dashboards to make sure goals are being hit. But then things like Slack, I'm sure some folks on the call are familiar with Slack. It's just a way to internally communicate with your staff. You can kind of see who's on Slack throughout the day, who's not. You can share fun moments, you can share serious moments. That's really helped out for us. And then, as I mentioned, that Zoom technology, I think it's very important that your teams utilize a Zoom or a go-to meeting where you can have these face-to-face video calls, with your folks. So that's really been helpful for us over the past couple of weeks.
Well, thanks so much, Bob. Adam, let's transition to you. SMS Assist, certainly a wide range of service. What are you seeing from the repair and the maintenance and certainly on larger projects that you might have going on, whether it be gut renos, or how are you dealing with it in your geographic area?
Sure, and I think it's important just to quickly circle back. I think Bryan made a number of really, really strong points. I think to give a little context on SMS, we manage the maintenance experience for over 100,000 single-family homes nationally across roughly 40 markets. So we determined early on that we needed visibility, and visibility fast. So that's both on the resident side and on the vendor side. On the resident side, we immediately reconfigured our questions and our scripting to understand were they exhibiting symptoms, so that we could feed that information not only to our clients but also to a vendor that might be going there. On the vendor side, we wanted to understand, was their capacity impacted, number one? So do they have technicians on their teams that are exhibiting symptoms and are out of work? But also, who are the vendors that are willing to go into high-risk situations, are willing, able, have the necessary equipment that want to go and handle those emergencies? Because there are many out there. Because we really wanted to focus on the vendor side because, for us, a lot of these vendors were the only source of business right now. And we wanted to help them stay in business. So I think visibility on both sides, although the components are more complex, there really did not need and does not need to be an interruption in service, depending on what that strategy is from the client. So in Todd's case, yes, we may be deferring certain priorities, but other clients wanted to keep business as usual, and we found a way to be able to do that. I think, we've been lucky that on the maintenance side, single-family home maintenance with so many families working from home now is considered an essential service. But also on the construction side, although we've seen some pausing, in many cases, just making sure that the vendor base has the necessary letters or documentation. We've been able to go out there. Again, we're taking the same precautions, whether we're going out and scoping a property for turn or for post-acquisition renovation. We're just making sure that we've got visibility into health information on both sides. We're taking the necessary precautions. And if we're doing that, and our platform allows us to reconfigure our process, our dispatching process, there doesn't need to be an impact to the service level. There doesn't need to be an impact to the service offering. And that's really what we've been focused on over the last couple of months.
Adam, has the evolution of the COVID-19 crisis changed how you're doing things? Are you changing it week to week, or have you put in sort of procedures that have gotten you to this point? I think it would be great for our audience to understand how it's evolved, especially at the scale that you're at.
Sure. So we were in a position to really just have to configure the tools and the processes that we had in place. So again, we offer full end-to-end maintenance services for clients. So that's everything from a call center to creating a work order, managing a work order, managing the vendor base, the vendor management function as well. So just on the front end, as an example, dealing with a pretty large call center, we just had to reconfigure what that script looked like. Which makes, obviously the learning curve, the training aspect consolidates that because it's just feeding that call center representative different information, different boxes that need to be checked. On the vendor management side, it's a very, very similar experience. We're just, again, tweaking things, reconfiguring, sending slightly different reporting. So rather than just a scorecard, now it's a scorecard, a performance scorecard plus a capacity scorecard so that we can continually feed information back and forth and then ultimately into our system. So that the system, again, just like it did before this crisis, the system was informing which vendor should get which work order and which submarket for which trade. As long as we're still inputting accurate new information based on COVID risk, that process really doesn't need to be interrupted. So again, having good processes, having good visibility, but then, whether it's a spreadsheet or whether it's a full tech stack, just having the ability to configure that to aid your teams. And again, what is, definitely a more complicated decision-making process today.
I appreciate that, Adam. Steve, how have you evolved over the COVID-19 crisis? With over 200,000 in field services out there, the repair, the maintenance, we've heard from the other panelists. Have you done anything different? Do you have any sort of one-off ideas that our audience could really institute into their processes today that you've tried and you're having success with, Steve?
Thanks. The rest of the panel covered a lot of things that we've done. I think the one thing that stands out for me is our converting to basically 90% of our associates are working remote, and that was done, basically within 30 days. I think that's a testament to our technology platform and infrastructure and how flexible and nimble it is, as well as our associates. Being trained well enough to work remotely and for us to maintain, as somebody mentioned, the performance while all that was going on. I think the other challenge for us is, transparency to our clients, maintaining that transparency in what could otherwise be confusion, right? If you think about how things are changing every day, states making determinations as to what you can do, what you can't do, vendors making those same decisions based on their personal situations. So I think, in the midst of all this, communication, and we have associates dedicated to, client relations, and our, our technology enables them to share a clear vision of what's happening, why things are happening, and if there are delays, why those are happening. I think the other thing, and Adam mentioned this, is communicating with the vendors, and changing, tweaking, if you will, how we're interfacing with them. What questions to ask. Being considerate of their circumstance, working that into your scheduling. And again, at the end, optimizing the performance based on, basically all the restrictions that have been put in place by this pandemic.
Yeah, absolutely. One of the interesting things that we've certainly seen across the marketplace is, how empathetic these various teams have become. How is your staff handling that empathy question, right? When you have folks, really calling with some concerns that you may or may not have had before. How are your teams handling that in that way that really shows that you're trying to care about their concerns, whatever they may be?
Sure. Well, I think you mentioned the keywords empathy there, right? Our fulfillment team is divided into regions, so they're a little bit more in tune to what's going on in those regions, because it is, again, all about the geography. Listening, right, is kind of the key. Managing from a property-centric approach versus a kind of a work order approach. Again, we have responsibility to our clients, but in the end, it's in everybody's best interest that what goes on at those properties works out best for all. So, people are fearful. People may be sharing things with you that, don't necessarily pose a great threat or, aren't urgent. But, listening to them and letting them talk about it, as opposed, of course, to kind of dismissing it, I think is key. So basically, I just say, listening to them is important, and there's no rush to get them off the phone, if you will.
Sure thing. And I appreciate that. Just to our audience overall, there is a button on your dashboard for questions, and we'll hopefully have some time at the end to be able to get to a few questions from our audience at large. Adam, I would love to transition to one of the great questions that is really occurring across the nation for whether it be small operators or large, which is how do we handle these vacant properties that we are attempting to get leased up, and what are some best practices? And I would love for you to share how you're handling that today on the vacant side, and what you're doing from a responsible way to get them filled up in this new world.
For sure. Thanks, Jeff. So first, I think over, since 2012, I've seen large volume construction handled a number of different ways. And I've yet to see it done remotely when it comes to construction. Single family maintenance is different, but when it comes to construction, I've never seen it done effectively, meaning speed, cost, quality, from a remote perspective. So I think boots on the ground, local boots on the ground is essential. If your vendor base knows that you're not going to be showing up on site, but their other customers are, they're going to be prioritizing their work. So I think it's important to have local workforce, regional management structure, national management structure. And I understand that, for certain companies that don't have local density, meaning a large portfolio, it can be challenging to support a structure like that. And that's why, there are partners out there that have more density. But that's step one, is you have to have a local workforce. Number two, it's understanding the little tiny micro components to the process. It's not how long does it take to turn a property 10 days. It's how long does it take to scope a property? How long does it take to approve that scope? How long does it take to submit that to a client for approval? How long does it take to create work orders, assign work orders, vendors to accept work orders? There are, you can get as micro as you'd like, but it's really important to understand how long each of those is taking, so that when something, when average turn time frame goes from 10 to 15 days, you can immediately understand where the bottleneck is. And I think, lastly, it's important to provide that visibility to the client, to yourselves, to the vendors in real time within, whether it's a portal or it's some kind of a weekly report out. But everyone needs to understand the part that they're playing in the process, because handoffs can get very messy. Properties can sit for a long amount of time because the necessary visibility just isn't there for one of the parties that's playing a role in the process.
Yeah, that's good stuff. Boots on the ground in these times, more important than ever. Bryan, I'm going to transition to you now. I'm sure that some of your rentals currently are unoccupied. You certainly mentioned, getting them ready, rent ready, and how you're doing it. How are you handling the various showing of the properties and addressing concerns of tenants that are looking for a new place to live?
Well, thankfully, we were already set up across our entire platform on a self-showing model, utilizing a company called Tenant Turner in conjunction with code boxes. And actually, we had been on it long enough that kind of worked out all the kinks, made sure our screening processes were intact. And to date, that's basically a selling point, because one of the concerns that we've seen just from listening to other operators across the country is those that are doing either trying to attempt to do either occupied showings or accompanied showings are having difficulty with concerns of social distancing and other concerns that applicants might have. So this allows, self showings allow the applicant to view the property on their timeline. I really like the idea that Todd had mentioned earlier, just creating a normal rotation of a cleaning in between so many showings, and that's a procedure I intend to implement within our process. But that, in large, that's one of them. The other things we're doing in conjunction with, getting the properties out there, getting them advertised, back to that turn cycle, just tightening that up as best we can. And again, that's why it's so important to communicate with your vendors to make sure who can do what and what realistic timelines that they can perform on, and then ensuring that work's done correctly. I did mention earlier just the Z-Inspect component. Also, you didn't catch it earlier, that's the inbound tenant that's moving in can perform their own move-in inspection. Doesn't mean our guys are not doing it, but it's an easy way not to have to go back and accompany with the resident. And of course, electronic document signature. There's just a variety of different ways. Everything application-wise is through our software system, which is all cloud-based. So it's amazing. I think just where we are in the cycle of operations and systems and everything associated with it, SFR space, is I do think that we're in a unique time to where we can facilitate normal operations with outside systems and services and procedures in place. And that's what we've been able to do. We've seen a slight drop in the number of people inquiring on properties, but what we're seeing in return is we're seeing those that are inquiring are more serious and they want to get into the property more quickly. So they're not really shopping as much or tire kicking, if you will, but they are ready to go once they submit their application, get approved. And just just utilizing as many of those vendors we can and systems and procedures we have set up. One of the things that I would like to mention as far as one of those that we found successful has been we use a company called Panelists, and particularly on our C-class assets to where actual residents may or may not have checking accounts set up. So this is an assignable payment system. It's outside of the operating software. They're not required to have a bank account to have it set up. They can go to a local Walmart or grocery store or whatnot and make payment, which is then receipted to you electronically within like a normal ACH turnaround of 1 to 2 business days. And that has really been beneficial as far as the time cycle that we're in right now with everything going on. It's also been a great time for us to convert some of those. While we don't accept cash payments, we've been open to accept money orders, cashier's checks, and that sort of thing in the past. So we're trying to convert as many of those residents as we can over to an electronic payment option. And this has really filled the need for that.
Well, that's fantastic. And Bob, I know you're working with a lot of various, whether it be institutional or smaller managers across the nation. Have you seen any best practices on how folks are handling vacant rentals and getting creative versus the old, unlock the door and take a look around to more of an online sort of experience? What have your customers been seeing, Bob?
Yeah, I think you hit it head on. I think people are kind of adapting to the self-showing technology, maybe more now than they had in the past. I guess we don't really get that in depth with our clients at that point. Kind of talking with Bryan mentioned earlier, that Z inspector has kind of helped out with move-ins without someone being there to do the inspection for us. Yeah, they've been gathering the filter sizes off that inspection, and certainly helps get our product deployed a lot faster for them to start seeing, the tenant sees a nice savings in the energy costs. The property manager sees a nice downplay in maintenance repairs, and their staff having to work through that, and that passes through to the owner. But yeah, in terms of the technology there, I do think the self-showing is, if you bring it back to it, is what's we're hearing from a lot of people that's working for them.
That's great. As the hour continues to evolve here, we've been starting to get quite a few questions, and we are seeing multiple questions regarding forbearances and how not only property managers are hearing these questions, how the individual owners are handling these questions. Obviously, on the residential mortgage side, there's been some plans put in place by banks, and there's been some standardization of what that forbearance looks like for single-family homeowners. But on the rental side, it's been a bit of the wild, wild west. So we're seeing quite a few questions coming in today. And I'll just read one right off the bat, which is, with forbearance in place for homeowners affected by COVID, is the rental marketplace seeing tenants not paying rent due to the pandemic? And if so, how are the property owners putting in loss mitigation practices in place? And this really sums up the question. And, Todd, I'm going to start off with you. Is how are you handling the questions across your geography?
Well, fortunately, and this has been surprising to us, especially in light of the eviction suspensions, which are in place in all of our markets, residents are generally continuing to pay. So we haven't had to think too deeply about actually acting on a lot of hefty forbearance changes. I mean, we're normally in the sort of 90-ish% paid range through yesterday, maybe a little bit higher. And we're only running a few points off of that. Bryan mentioned paying through the money center counter at Walmart's, and I'm going to go off trail here a little bit, because folks may find this interesting. What we found is that of the folks who have not paid yet, a very high, disproportionately high number of them were either cash payers through our version of that same system, or were check payers. And a lot of that we think can be attributed just to logistics, shorter opening times, not sending in the mail, but there is some credit component. As for actual forbearance, we have asked our residents to get in touch with us if they're having trouble paying. And if a resident who's on the phone or in an email starts talking about that kind of thing, we've directed our team members to ask some open-ended questions to learn more about the resident's situation. And there's the goal for that is twofold. First, it creates opportunities for our team member to show that compassion and empathy that everyone has already mentioned as being very important. We agree that's very important. We've crafted some language to help our team members do that. It doesn't come naturally to everyone. Second, we really do want to know if the resident has actually experienced a hardship, or if they're just worried about what will happen if they do experience a hardship. And it's important for us to address both of those kinds of situations. Our forbearance approach differs by situation. So if someone has lost their job or suffered some other hardship that's related to the crisis that's reducing their income, we're waiving late payment fees so long as they pay in full by the end of the month. We used to do business through a lot of third-party property managers, and we had a lot of poor experiences with payment plans. In fact, I don't think we ever had a good experience with a payment plan. So asking for a partial payment doesn't come naturally to us, but we're doing it nevertheless. We're also giving residents who've lost jobs an opportunity to move with less or with no penalty. We're not charging notice fees or sending out notices to vacate. And in at least one of our markets, the entire state considers sending that kind of notice to vacate to actually violate its debt collection laws right now. We've quit filing for evictions or writs nationwide. We started that a few weeks ago, other than in cases where the cause is unrelated to non-payment of rent. We've made a lot of this pretty clear at our website too. And finally, we're taking a more nuanced approach to renewals. We've seen a number of situations where residents who previously told us they wanted to terminate their lease are now changing their minds. In some cases, the property they were supposed to move into is unavailable because somebody else hasn't moved out. So we've come up with more flexible options for residents to stay, including 3, 6, and 9-month extensions. And that's been a win-win for everyone. So that's just what we've done so far. We're a little bit worried about what's going to happen in May, although government assistance is now actually showing up, and unemployment is extremely generous. So we're directing residents to our website, where we've listed quite a few very helpful links for information and resources if folks are looking for some help. And so it's this fine line of asking people to pay, but doing it in a very nice and compassionate way.
That's great stuff, Todd. Really appreciate that. Instead of me directing the question to one of you, I'm going to open it up to the remainder of the panel. I would love to have some more insight on how any of you and your clients are handling forbearance in this COVID-19 crisis. So if one of you could just jump in, that would be fantastic.
Well, I can jump in on that since we're talking about tenants and payments, et cetera. And I would probably defer back to, we've talked about a number of panel discussions nationally, a lot of interaction between operators on a national level and geographically local to us, but just trying to figure out, what best practices are working, and more to Todd's point, ensuring that we're listening first and foremost, and with the understanding that when your team members know and are actually communicating back to the resident that we're all in this together. I mean, the reality of our business is, as managers is, you know, the resident, if they can't pay the rent, the majority of property management operators are not being paid either. And more importantly, our clients are not receiving their payment either. So we truly are in this all together. And what we've done internally is develop basically an 8-step process for our team members to follow, and it's gradual in the way that it plays out. But you know, first and foremost is ensuring we understand what the situation is, and if we have somebody that's in a particular situation where they're working for an employer who's shut down, they've reduced their hours, they've furloughed them, or they've just outright lost their jobs, just understanding and having them submit something in writing to us. We actually have forms that we've created for that, just to then turn around and we can have that discussion with our owner client. And obviously some of our larger clients we have standing policies with in sense of progression. And individual owners, we're basically defining what we're working with within this 8-step process. And ultimately, I think number 8, if we get to a point where we actually have had some owners that are willing to basically defer out rental payments, we're leaving that as a last step or forgiveness of a rental payment. On an individual owner basis, sometimes that's occurring. On a professional investor, that's not the case. It's more of a deferred option. And I know we work with payment arrangements from time to time, particularly in some different classifications of properties where we have, you know, we just have hourly employees, we have service workers that are actually being paid by hour versus salary, and being able to work with those folks and just understand that, hey, I've had a lot of owners come forward to say one practice is for the month of April and May, we're going to forgo your rent, but then we're going to actually create a payment agreement in the form of an addendum to the original lease and make the balance of that payment payable in a certain number of months. And that's played out well. One of the other things that we did on a recommendation from another property management company out of Florida is we've created a rental assistance fund, which we just launched out on Friday, trying to actually take in donations, and then from the applications submitted from our residents that have worked for an employer that's closed, they've reduced their hours, or they furloughed or terminated them, just being able to give a percentage of their lease back to them to make a payment, which is benefiting not only the tenant, but it's also benefiting everybody else in the equation as well. And a lot of our clients, the expectation is through conversations with them is that they'll be more than willing to contribute something to that cause and benefit the greater masses.
That's fantastic. Love to hear stories like that, and I've certainly seen various, and it's all over the communities across the nation, with folks stepping up, especially for hard-hit industries such as restaurants and bars and areas that are just completely shut down. Love to see these various funds being set up to just really help those that still have the means to be able to contribute in various sectors that all mean so much to every one of us in our daily lives. And that's probably more than anything what we're missing most, which is those routines, whether it be visiting the local restaurants or the sports club, various, just sort of the day-to-day life that we've all enjoyed so much. And those are some of the people hurting the hardest. And I appreciate you bringing up that, Bryan, on really just helping folks out that need it the most. Well, folks, it is past the top of the hour. That certainly went by fast. I really want to give a big thank you to Todd, Bob, Bryan, Adam, and Steve for really some great insight today in property management and how all of you and your customers are dealing with the crisis, and really some best practices on how to get us through. Once again, my name is Jeffrey Tesch from RCN Capital. Next week, in our third series of these webinars, we're going to be doing in-house versus outsourcing as a strategy for portfolio management and how we are dealing with those various scenarios today. Once again, thank you to Robert and Suzanne from REI Inc. magazine. Have a great week, everyone.